Dummy's Guide to GST. From July 1st, India will roll out the Goods and Services Tax. Earlier, if you were a manufacturer, you would be charged a tax called excise. Transporting the goods to be sold in a big city like Mumbai? Pay entry tax, octroi. Selling from your shop? Sales tax. Shopping? Pay VAT. Cinema? Entertainment tax. You're a professional photographer? Service tax. Renting a property? Service tax again. Importing something? Customs duty. Buying a foreign car? Luxury tax. Taxes, taxes, taxes. Benjamin Franklin, one of the founding fathers of the United States and the face on the $100 bill, once said, "Only two things in life are certain, death and taxes." Every government would invent a new tax to fill their coffers. Now what tax can I think of? Long delayed by political opposition, there are already 160 countries having GST before India, some as early as in the 1950s. So should we be anxious that it will make us pay more taxes, or happy that taxes will fall? Let's see how GST may affect you and me. Let's take the case of a Maruti Swift petrol car in Mumbai, pre and post GST. Suppose if the basic price of the car was ₹100, there would be several duties and taxes like central excise duty 12.5%, infrastructure cess 1%, octroi 4.5%, VAT, CST 13.5%, plus freight of 5% and insurance of 2% to make it a total cost of 143 rupees. In a post-GST world, there would only be freight 5% and insurance 2% as before, and GST at 28%, making the final price 137 rupees, 4.2% cheaper than pre-GST. However, in a place like Delhi, the price would go up by 1%. 85 items of a total of 1,211, including fruits and vegetables, food grains, jaggery and milk, have no tax at all. 4 slabs of GST have been finalized. 5% for sugar, tea, coffee, edible oil. 12% butter, cell phones, pressure cookers. 18% hair oil, soap, toothpaste, heavy machineries and some factory items. 28% fridges, TVs, cars and other consumer durables. In addition to that, there is cess of between 1 to 3% in the 28% category. We are creating a European Union-like common market for India, where it will become easy to send goods from one state to another. Win some, lose some. The net effect will be around the same as you spend today. But here are some items that may become cheaper. Toothpaste, shampoos, soaps, hair oils. 4-wheelers, batteries, movie tickets, air tickets and heavy machinery. And some that will become more expensive. TVs, fridges, ACs, soft drinks, laptops, Ayurvedic products, paints and your phone bill. The government had some tricky questions to figure out. Is Parachute a hair oil or a cooking oil? If it's a cooking oil, then it's considered an essential item and the tax is less, 5%. Is Vicks tablet a medicine or a sweet? Is Kit Kat a biscuit or a chocolate? Medicines and biscuits would be taxed less. So you may ask, why is the government being so nice by reducing taxes? But the government will actually be better off. India's economy will gain 4.2% after the implementation of GST. GST will increase internal trade between states. This is what is called a win-win situation. We pay less tax and the government also has more money. Magic really. India had a complicated tax system that made us spend more with lower income. But now with GST, we can all agree that it will bring about a better outcome.
If you like this video, share it with your friends and become BizBo's friend by subscribing for free to BizBo's YouTube channel. Come, let's discover the world together.